Hello traders, hello everyone, my name is Gregor and welcome to our new video analysis surfing the Elliott waves, where I'll look at some of the most important developments for this week. This video has been brought to you by Orbex. I'll look at the euro versus dollar index, cable, crude oil, dollar, Mexican peso, CAD, gold and silver. So we are seeing quite interesting reversal. US dollar is turning to the upside. But we have seen earlier this week US yields coming lower, and the reason is because marketing speculators believes that actually Powell and Fed in general will stop the hiking cycle, because credit tightening conditions because of those bank crisis, of course, is somehow also going to help to slow down the economic activity. And their goal, after all, is to slow down the economic activity because they believe that this will bring down the inflation. However, if despite credit tightening conditions, inflation will still be ticking higher and not coming down towards 2%, they will still be looking to hike the rates. And what we are seeing now is euro dollar is turning lower. It's most likely because now we have Fed behind, and if there is a speculation that Fed will stop the hiking cycle, now maybe the same policy could be transferred towards the ECB. And that's why we are most likely seeing this reversal on the euro dollar. Now, my primary count still suggests that we are headed to the downside for a wave C. I was quite unconvinced when we have seen this strong recovery, but it was only a one-day move, and we clearly are reversing now away from the 78.6%. Looks like that's an impulse. So in my opinion, even if it's just short-term weakness, there should be minimum 3 waves decline. So 3 waves decline. So even that's wave A, B and wave C, and we will see more upside later on, there is still, in my opinion, room for more weakness. And the reason why I'm looking for this potential very big flat correction here in a wave B is because, on the other hand, you have this wave count, this structure on dollar index, which actually shows only 3 waves of decline. I was looking for potential for potential breakout, which would signal that we are headed in a lower into wave 3 rather than wave C. But since market reversed away from that line, well, now we just have to be aware if maybe the upper trend line will be broken, then more gains will be seen here, and then obviously this could call more euro weakness. If suddenly, let's say that after this temporary 3 wave drop, we will see again a new support and market turns higher, and we will not revisit these January levels, then in my opinion the best wave count to look for is most likely this one, which shows that then wave 4 is already finished and we are headed higher for a wave 5. But as I said, the most important will be the short-term structure, because that's an impulsive reaction lower. It means even if it's an ABC correction, you still need to see more weakness. So I think that there is room for potentially 106 even after the next bounce. Now let's take a look on cable. So cable is also seeing some pullback here. If you recall, I was looking for potential supports down on cable, down here around 1.18. It was very similar failure breakdown compared to the failure break higher here at the end of January. So it's a tricky price action which normally will occur in a flat correction. What is a flat correction? It's a 3-3-5 pattern. So here we had these 3 waves down for a wave A, which is missing, by the way. I'm not sure why. Anyway, here it is. So here's the 3 wave drop for a wave A. Then you had quite strong deep recovery for a wave B, but still it can be counted in 3 waves, right? And then more importantly, we have seen a recovery all the way back to the ending point of wave A in 5 waves. So what's going on? Well, we have seen a very impressive recovery through the upper trend line of this downward channel, and that's the first signal for a new resumption of an uptrend. Now we are seeing some pullback here, but that's totally normal when you have the first leg from that low very sharp and in 5 waves. Well, this is not just a normal impulse, it's actually a leading diagonal. So it's a motive wave where you have this overlap between waves 2 and wave 4. So this leading diagonal puts now correction in play. So even this one suggests that we will see a minimum free wave drop for a wave 2, maybe even only wave B, but eventually the first support should be seen at 2140, then the deeper one would be at this wave 2, which may not be surprised, because normally when you have a leading diagonal, the retracement of the higher degree can take price to the wave 2 region rather than only wave 4. So there is room for more downside, but eventually after this pullback, I think that sooner or later we will see a retest of these highs here from early this year. Now let's take a look on crude oil. Now crude oil, as you know, came very nicely to the downside. We've been looking for this drop out of a triangle here on crude oil. There's still maybe room to retest this lower zone around $60 per barrel, but overall I think that we are in a fifth wave. So if we are in a fifth wave, keep in mind that we may see a reversal or bottom formation in the next few weeks. So far, the fifth wave, obviously, whenever it comes out of a triangle, it means that it confirms actually the fact that we are in the final stages of the higher degree downtrend. So I think that this is the case here, and that we will see at some point this recovery into wave B. Now, whenever this crude oil is really going to stabilize, watch out for Mexican peso. Okay, NOK could also do well. So Mexican peso still in downtrend because market was unable to break this trendline resistance connected from wave N to wave B. So as long as this resistance is in play, I think that dollar Mexican pesos could see more weakness. Generally speaking, Mexican peso was doing very well despite all of these risk off flows. Even it came, Mexican peso came higher even sometimes when we have this crude oil coming to the downside. So I think that Mexican peso overall is still, in my opinion, in a very good uptrend, and ideally it will retest the new lows. Now, if crude oil was really in a fifth wave, what we can expect that even CAD could do well at some point, because higher crude oil is positive with CAD. So I know the dollar yen is bearish, US yields are bearish, and that's what is driving yen crosses to the downside as well. But keep in mind that we were looking for this wave 4 corrective rally a few weeks, if not 2 months back. And so far it came very nicely to 100 resistance area, and we are selling off quite sharply. But keep in mind that we are in a fifth wave now, and always when you have 5 waves down, what would you expect? That market will slow down for 3 waves and then reverse to then continue even lower. So because we are in the final stages of this quite extended decline, I just should be aware of potential limited upside, maybe some support here, especially when you look at this range back from the start of 2022. So maybe we are going to stabilize here for a new free wave recovery, and this obviously would make sense, especially if crude oil is really maybe approaching the end of the current cycle. But still, when you have these US yields turning to the downside, when you have stocks also turning to the downside, the safe havens obviously is going to be, like I said, Japanese yen and metals as well. And if you look metals, we have seen a very nice strong rebound away from this 110 area. It was the previous swing high, become very nice support. So I think that we are potentially in a wave 3. So sooner or later, I think that we will resume higher, even retest these all-time highs. Looking at the 4-hour chart, recently we might completed this wave 4 setback. So wave 5 targets ideally in the short term are at 40 or 50 bucks above 2000 level. So that's the area where we should be maybe a little bit more careful and aware of a new reversal lower for a free wave retracement, because again, if something is visible on the price chart in 3 waves, be aware of potential free wave retracement. Of course, sometimes we may not confirm where wave 5 will end unless you see immediate very strong reversal from the resistance levels. Now looking at the silver, I think that this one could be a little bit more attractive if you want to ride metals on the upside in these uncertain times. What I'm looking at is complex corrective decline, still very sharp one, but in 7 swings. Okay, and then you had a very nice and strong recovery, but could be a leading diagonal here. Maybe this wedge trying to tell us that current bulls are losing some strength here, and that there can be a new pullback, ideally wave B, wave 2, who knows. The first support again would be probably around this wave X that comes in around $22, and then you have obviously 21.50, which was this minor swing low here. So after the next pullback, I think the silver could be maybe could have much more upside potential compared to gold. Okay, traders, thank you very much for your attention. Hope that you enjoyed this video, and talk to you soon.